On the gold thing, all the stars are aligning. You know, you've got high inflation coming. The tragedy in Japan will add to inflationary pressures throughout the world from a lot of commodities. You've got, you know, devaluation of the U.S. dollars.
Now, the inflation fears. We talked about what Ken Powell, the CEO, had to say about it, and this is a quote. As we look forward to fiscal 2012, we currently anticipate that supply chain inflation will be higher than this year's estimated 4 to 5% rate.
Thanks, Shaq, as food prices continue to rise.
And again, that's a big move to try and fight inflation. The question is whether or not that will be exported to the United States. It's a problem that Warren Buffett has been very concerned about.
We're seeing inflation. I mean, we buy cotton that's fruit of the loom. We buy copper and marmon. I mean, if you look at basic raw materials, prices have shot up. I mean, cotton is double the price of, you know, a year, 18 months ago. Copper has moved up very dramatically, but you're seeing it throughout industry.
Street cap time. Mortgage applications up 2.7% last week. This is according to the Mortgage Bankers Association. Refinancing and purchasing activity both up at the same rate.
Rodkin had to say, while inflationary pressures continue to build and difficult conditions persist, we expect outperformance to continue to benefit from pricing actions underway, strong supply chain cost savings, and other profit-enhancing initiatives we have previously detailed. Okay, to recap, this is Conagra's formula to grow profits in this environment. Raise prices. The current quarter could be weaker because of inflation.
With positive comps that are more than offsetting the inflation.
GDP for the fourth quarter revised to an increase of 3.1% from the earlier estimate of 2.8.
You know, they have a 1-year and 5-year expectation on inflation, and boy, it really has been ramping up. And remember, I'm going to go from Fed final to March final, which we had today. Fed final 1-year expected inflation was 3.4%. It moved up to 4.6%. These numbers are really starting to take off.
Even a little hot on the spending number, up 0.7%, and income up 0.3%, and that came after an upwardly revised number. I think the key there is you do see that white line ticking up.
Many experts, including economists with the federal government, believe that these historically low rates will continue to rise.
I think the consumer is going to be decimated by increasing commodity prices, whether it's on the energy side or the food side. So we've had 8 consecutive months now of consumer spending increasing.
Higher commodity costs, inflation picking up.
And that's going to push up interest rates. We're also seeing inflationary pressures push up interest rates as well.
The risks are fairly substantial that the market could be surprised with a sharp increase in interest rates